Good evening, everyone. On behalf of Women and Young Members Excellence Committee of ICAI, I extend a warm welcome to all of you to the Young Excellence Synopsis series. The series is conducted by the committee to share technical updates, enhance non-technical skills, and encourage our members to confidently express themselves in public forums. This initiative aims to upskill and inspire our members to step forward and make the most of their abilities. This series is conceptualized by our chairperson of WYMEC, CA Preeti Savlaji, who is also the chairperson of Sustainability Reporting Standard Board and vice chairman of Valuation Standards Board for the year 2023-24. It is also conceptualized by a vice chairman of WYMEC, CA Abhay Chajerji, who is also the chairman of Commercial Laws Economic Advisory and NPO Cooperative Board and vice chairman of Accounting Standards Board for the year 2023-24. Young Excellence Synopsis aims not only to provide essential updates on technical knowledge, but also to foster the non-technical skills. We aim to empower and inspire our members to confidently step onto the public stage and excel in their verbal expressions. Today's session in Young Excellence Synopsis number 21 holds to promise for enlightenment as we explore the subject areas of opportunities for CAs in fintech and startups. Today, it's my honor to introduce you all to the speaker for our today's webinar, CA Shrenik Shah. He qualified his chartered accountancy in the year 2012. He was into lending department of NKGSB Bank for 2 years. Since 2014, CA Shrenik Shah is working on his own QSR startup, Desert Junction, till 2019. He then headed the credit team of Liquid Loans, a fintech startup, in 2019. He joined Credit Fair in 2021 as head of credit and since 2023 expanded his roles beyond credit to lending partnerships. I, on behalf of Women and Young Members Excellence Committee of ICAI, would extend a warm welcome to the speaker for our day. Thank you.
Should I start? Hi, good evening, everyone. Should I be starting or someone else is?
So you
Okay.
can start. Yeah.
Great. Thank you, CA Jeel Shah. Thank you, CA Preeti Savla and Mr. Abhay Chajad, CA Abhay Chajad, for giving me this opportunity. It is a great honor for me to be invited by ICAI and to talk on such a bright topic for my fellow chartered accountants. I'll share my screen. Hope my screen is visible. Right. So, good evening, everyone. I'm sure you all must be knowing about startups and fintechs in general, um, and a lot more about the startup ecosystem. So, in today's session, I am going to walk you through to what startups are, what is a fintech, how can a chartered accountant play a pivotal role in the startup. So, before jumping to the topic, let me take you through today's roadmap, what we are going to do today. I'll pause for a couple of seconds for the disclaimer. and then jump onto the topic. Right. So in today's session, we are going to cover why startups. Why one should be joining startups, or why one should be a part of startup, or why one should actually start his own startup. We will go a little bit into that. Then, secondly, we will go on the types of fintech startups. So, fintech word seems to be a single word, but then there are n number of different startups or different businesses around the fintech model. So, we will touch upon what are the types of fintechs. Since most of the fintechs earn money on lending being the primary or the ultimate source of valuation or source of income for the fintechs. So we will go in deep about why one should be what are the different types of lending models. Thirdly, then jumping onto the core topic of today, why chartered accountants should join startups. So, what are the incentives? Why one should join a startup? Post which, as a case study, I will present my journey being a chartered accountant, gone through a startup, and now on a fintech platform. I mean, on a fintech startup. A little bit about my journey on a my fintech journey. And in the end, we will be covering how a CA can be projected not just as a CFO, but then how we can have a journey from CA to CEO. We will be covering that part. And in the end, for our folks who are from the practice, who are actively into practicing chartered accountants, we will have a chief wealth officer sort of journey. So, how they can be a part of this entire startup ecosystem, staying outside of these fintech startups. So jumping onto the topic, why startup? So there are multiple reasons why you should start your own startup or you should be a part of a startup. So first being it's a very big opportunity. India is a land of masses and population. So a lot of MNCs are always wanting to come to India, do businesses in India. So this has started right from the 18th century. The East India Company came to India because it's a big opportunity in India. But there's always the local people. We Indians, we have always have an edge in understanding the local markets, understanding the problem gap. So we are able to bring in a better problem solution. Just copying startups, which are in the Western world, won't simply work in India. You need to understand the local problems better because it is a totally different world. When the kind of population, the kind of infrastructure we have. So the local people always would have a better edge in doing startups. And with more than 140 crores of population, the TAM, that is the total addressable market in India, is quite huge and it is across different sectors. So you may start any startup, it may be in any sector. There is definitely a big opportunity for you all. Secondly, the ecosystem awareness acceptance amongst the customers. So the startup wave has started in last 10 years and now I feel it is at the peak. Everyone is aware, or the end consumer, I would say, is very much aware and already has accepted those startups. So previously, online ordering food, or rather, online shopping, may it be Myntra, maybe Flipkart, or maybe it be online ordering of medicines. So the kind of acceptance and the awareness which the local customer has, that is superb. So that has been good. And the initiatives by the our government of India, our PM Shri Narendra Modi, on right from you may say Jan Dhan Yojana, UPI, account aggregator, all sorts of the initiatives the government is taking is nurturing the strong base of digital economy. So it is going to help, and it was helping, and it is going to help more, especially the fintech startup, because there you need a lot of technology, the internet infrastructure, the tech infrastructure. So that has been on the top of government's vision and mission. Thirdly, the after Geo coming in, the kind of infrastructure, the internet, the connectivity, the data which we've got, so it is a very secured, very reliable infrastructure at a reasonable rate. So now the technology has gone to each and every individual across India. Plus the new data protection bill which has come in, so that is going to boost the infrastructure security and overall tech. Coming other way, so now startup is not only bound to a single sector. So initially, a startup was something, a D2C brand, some unique product, problem solving for the individuals in the nation. So it is not restricted to that. Now startups have gone beyond from B2C to B2B as well. So now there are a lot of startups who are solving the bigger problems of SMEs, MSMEs. The startups have been covering right from agriculture till aviation and everything in between. So no sector has all the sectors have problem, and our young minds, young generation, they have been able to identify it very well and solve those problems efficiently. Now let's jump to what are the types of fintech. So since as I said earlier, most of the lending startups, fintech startups, um, have different varieties of businesses. So they start from right, as lending is one of the biggest, it's one of the most traditional business in the world. So lending has started right in 16th or 17th century. So people have been doing it very traditionally. Versus now the startups have come in. So the loan disbursements are happening within weeks and days. Previously, it used to happen. It used to take months if you wanted to apply for a loan and get it disbursed. Blockchain, crypto, there are a lot of startups around it. Register, RegTech, so your softwares like Tally, your compliance, all sort of compliance, the ITR filing, what you do, audit reports, all sort of these problems have been solved, and there are a lot of softwares around it. There are a lot of personal finance apps where you can track your daily expenses, daily spendings, what are your investments. So all such of apps like Money5, IND Money, they've solved this bigger problem. Instead of having n number of printed bank statements, passbooks, or on the Tally also having different accounts at different places, you are able to collaborate it in a single app, and you can see your assets, liabilities, everything in a single window at a single click anywhere in the world. So they have been doing a good work. Payments and billing softwares are doing a good work, like Khata Book. They are tracking attendance as well. You are able to send bills. You are able to send invoices. You are able to send reminders for payments. So a lot of problem solving has happened over there. Insurance companies also have gone completely digital. So, Policy Bazaar being one of the biggest example, Digit Insurance, where within minutes and within few clicks you are able to get your insured, I mean yourself insured. Capital markets, everyone's favorite, Zerota has done a commendable job, and after that, a lot of other people have also tried to digitize, have a seamless journey, very customer friendly approach. Gamification has happened a lot on these apps as well. Wealth management, I already talked about, is somewhat related to the personal finance. You are able to view your investments, your wealth across platforms, and also they offer a lot of analytics into it. Apps for money transfer, remittances, Google Pay, PhonePay, Paytm, which we have been using it so seamlessly. We've been using it uh, daily. We've been it has came into our DNA. It is in now our DNA to use those apps, and you don't even realize that it's just a few years ago which it has started. On the back of our mind, we have been so used to it that these things seems to be quite old and quite good. Uh, Few examples of popular fintechs which have made big. So the names which I've already taken, Paytm is one of them, Razorpay, Divides, BharatPay, Digit Insurance is there, Policy Bazaar, and the lending side, the Incred is doing very good, Early Salary, the place where I belong, Credit Fair. So a lot of popular fintechs. So there are a lot of fintechs that have come out and are doing superb overall. Jumping on to what are the types of lending. So since most of the fintechs, apart from the lending ones, they don't have a core business. So fintechs like who are into payment solutions, fintech who are into some sort of wealth management. So they have a lot of data around them, but then they're not able to monetize that data only with their primary service. So the ultimate aim for them would be to lend, because they have a good rich transactional data, the customer data, their behavioral data, at what time, what customer is doing what. what dates the customers have good liquidity, at what days he's spending. So apps like say Cred, they're continuously monitoring your activity, continuously monitoring your data, and then sending you alerts. So these may be on both sides, whether if you need money or if you want to invest money. So they are sort of acting as a neo bank with all the data. So personal loans. So in the types of lending, there's this new thing came in BNPL. So on on all the websites, all the shopping websites, on the payment gateway, you're able to see whether you cannot you can pay this later. So it's a buy now pay later product. You don't have to pay it together. On a zero cost EMI, you can pay in 3, 6, 9 months. So that is so efficient, so quick, and this has been completely digitized. Within seconds you can get a limit for yourself. You can pay it without any interest. The repayments are also very hassle free. Initially there used to be a ECS which you used to manually sign. Then came an electronic mandate where using your net banking credentials or your debit card credentials, you are able to set a match on your account. And recently, the government has come with a UPI mandate as well. So just using your UPI ID, you can instruct your bank to send the EMI every month to the specific lender. So BNPL consumer lending is one of them. Supply chain loans have come in, where those are small retailers in tier two, tier three city, or rather in tier one as well. Small shopkeepers, small shop owners, where they didn't have access to the banking funds. It was not very easy for them to get limits from the bank. So these startups have come in, and they are giving them limits. So they are helping in invoice discounting. They are helping in bill discounting, invoice financing. They are helping. So if a small retailer has to pay money to a distributor, they will help them pay that money, and then the retailer can sell those goods and give back money to the lender. And that is happening. For SME and MSME also, it was used to be a very tedious process. We used to go to public sector banks. It used to take months and months to process your transaction. And then too, even after a couple of months, it was not sure whether your loan would be approved or it won't be approved. There was a lot of bureaucracy, corruption, a lot of things were there. But now with startups coming in, we have a lot of alternate data around it. Now there's a new thing called account aggregator. With just your mobile number, I can have your all list of banks where your mobile number is linked with. I can have access to your GST data. Of course, it is a consent-based record. The customer gets an OTP. Once that OTP is shared, so the lenders on a click they get the entire banking data, they get the entire GST data. So on that basis, and with a lot of automation, a lot of models running in the background, people are able to give limits within minutes. So for giving a limit to SME, which previously used to, he had to take printout of loads of documents, send it to the banker. Now everything is digital. He doesn't have to give anything. Just download the app, give a few consents, give a couple of OTPs, and then done. You can instantly get a limit. What traditionally used to take months and weeks. So that has helped the SME and MSME to grow at a very quick speed, and they get funds at the right time. They've got a big order, they want to make some big payments. So then they cannot wait for a few months to get the money coming in. Here, within a day, within a couple of days, the money is actually credited in your bank statement. Third, revenue-based finance is doing very good. So this is again a product for the new age D2C companies, direct to consumer companies, where the normal traditional banks won't give them limits because they have a shorter vintage. They don't have proven track records, and the equity guys would give them a lower valuation. So in terms of debt, we are helping them. Whatever digital payments they have, we are taking that as a source and discounting them to give a 3 months, 6 months, 9 months loan. So this is doing very good for them. One more new product which has come is earned wage access, where this is for the salaried people. So what these new age companies do, they have a deep integration with the HRMS of the company. So say I'm working at Credit Fair, and now a lender will have access to my HRMS. So as and when I request for a loan, he will get my data from the HRMS. He'll see that say example my salary is say 30,000. and I've worked for 15 days. So I'm eligible to, I've already earned those 15,000 rupees. So he will simply transfer those 15,000 rupees to me because that is what I've already earned. And on the month end, when my employer will, process my salary, what he'll do, he'll send that 15,000 to that particular fintech, and the balance 15,000 would come to me. So it is a very secured product, hassle-free. Employees don't have to, employees don't have to go to their employer for some salary advance, and the employer has to maintain a lot of records, किसको कितना पैसा दिया था. So all that hassle has gone away, and this is completely digital. Within minutes, if I have an emergency, if I want to buy something, or there's a medical emergency at my home, and whatever salary I've already earned, I can have access to it. Thirdly, these agriculture loans. So farmers, they are contributing so much to the GDP, to the entire nation. But then these were looked by only the PSUs who were present at the rural area. But now here also the startups have come in. They have been helping a lot. So here they are using alternate data. So here basically we are estimating the income of the customer by using data points like, what is the area of land he owns, what type of crop he is growing, what was the monsoon this year, what is the time period. On all of these data, we are able to predict the income for that farmer, and we are able to help him to buy any fund by, I mean, giving funds for agriculture and related activity. Next is peer-to-peer lending. So this is again recognized by RBI, and they are giving licenses specifically for peer-to-peer NBFCs, where they are acting as a platform, where borrowers and investors they meet, and it is sort of a platform where, I want to invest 1 lakh rupee. I will go to a P2P platform. I will give my recommendations that, I want someone with a X bureau score. I want someone who is salaried. I want someone who's staying in metro. I want someone who is working in a category A company or a blue chip company. So then that platform will, show me 5-10 options there. These people, they are wanting to take a loan. Are you willing to lend them? So I'll have all those details, and then simply, so they are like, the traditionally there used to be people who used to arrange finance in the business community, within the community. So this is now actually, brought on a larger scale. With the help of tech, we are helping people meet on the platform. And last, the personal loan. So personal loan also previously used to have a lot of time issues, a lot of hassles. Now, which due to technology, we've been able to solve that. And within minutes, within seconds, people can actually get a loan, can actually get a limit, which they can encash it whenever they want. So, with all these background about, startups, what is fintech, now actually let's move to our topic, why CAs should join startups. So, majorly there are two reasons. There are a lot of learnings beyond finance. You're not just, so usually, traditionally, a chartered accountant is looked like, he's a finance guy. He's always around accounts and finance and numbers. But then this is not the case in startup. The startup community has, been able to identify the hidden talent of chartered accountants, and they've allowed us to go beyond finance to roles, like operations, or it may be a product management role. So by product, I mean the technological product. So a product team manager has to communicate between the business team and the tech team. So, our inherent skills of, understanding things, going in minute details, um, that has helped us a lot. And we're able to think on a 360 degrees. So, what, if I'm making some change in the tech stack, what impact it will have on the business, what impact it will have on my profitability. And along with that, since the beginning, we are very conscious of compliance. We don't take compliance very lightly. We've been reading laws. We know what compliance is, what impact the compliance would have. Few compliances might not have a lot of impact, but few might have a bigger impact. So we are able to judge that and take a business call accordingly. Um, so apart from finance, there are n number of opportunities, and we as chartered accountants are, we are hustlers from the beginning, right from the internship days, articleship days. We are hustling between college classes and our articleship. So this has made us, we are very quick learners. Our grasping power is very good. This makes chartered accounting very preferred for senior leadership role uh, in any startup. Secondly, due to our domain knowledge, we can fit in everywhere, right from incorporation of a startup till the IPO. So we chartered accountant has a role in the entire journey. We have a very pivotal role in the entire journey from right from incorporation to the IPO. Unlimited learnings and multi-department exposure. So this is sort of a follow-on from the first point. So I'll give you a small example over here. I had joined Credit Fair in 2021, and we are a NBFC. We have an NBFC license, and we usually take loans from bigger banks and bigger NBFC. So there is due diligence happens very often, and they want to meet the department heads, all the department heads in the DD journey. So usually my founder used to handle this. We were a very small organization then. But one fine day, I had attended a couple of DDs before that. But and one fine day, he told me that, will you be able to handle this DD? So I said yes, I'll be able to handle this DD. And on the very same day, a lot of my department heads were not in office. So apart from heading the DD for the credit and risk part, I did it for accounts, I did it for collection, I did it for MIS. Because there is so much of exposure, so much of learning happening in that startup. So I was able to handle that so well. And just because I handled it well, in the last 18 months, I've handled 15 debt DDs and one equity DD as well. So that made me ready just because I was a startup and the kind of grasping power, the kind of learning curve I had. Next is ESOPs. So ESOPs, are very pivotal. ESOPs help you to be quite very motivated, and will make sure you get out of the bed every day, because working in a startup is not easy. There's no timing hours. You have to work 24/7. There are no Sundays. There are no Saturdays. But then in the end, you have a sense of ownership. In last recently there was an article that last since 2020 employees in startups have been able to make 1.45 billion dollars in ESOPs. That is close to 12,000 crores. So that is the kind of money. If your startup does well and you are putting a lot of effort, you're putting a lot of push in that, you will be rewarded apart from the normal salary which everyone gets. Then there's a lot of decision making involved, since startups are usually a small team, not very well organized. So there are a lot of decision making chances you will get. And people who like to work closely with founders and want to take decision, startup is an ideal place for them. Lastly, it is about all about flexibility. At startup there is no rule book. Everything is flexible, right from what time you work, right to what you wear, how you work, where you work. You want to work from home, you want to work from office, you want to work from some X place. Everything is possible. So here the only fixed thing is that you get this work done. Everything else is variable. How you're getting the work done is not important, but you have to get the work done. And so that kind of flexibility, it is not very stringent that you have to wear formals and you have to report at 10 o'clock, there is a late mark. Such things are not usually there in startups. Of course, on an early stage startup, but as they grow, they have to have some sort of uh, rules and regulations which they abide. For the next few minutes, I would be talking about my journey, my life journey, because when Gautam had called me to speak about this topic, this was very much connected to my journey. I did my CA, I did a traditional banking job, started my own startup, went to a fintech. So this is a lot of journey how I have lived my career around startups. So this is as a case study I'm presenting my journey. So I completed CA in 2012. I belong to a Kachi family, into the trading business. My parent, fathers, and my uncle, everything. It was a joint family. We were a 12-member family staying together. I had four elder cousins, and I was the first one of them to go to college. I did my graduation from NM, and there were two friends of mine. After 12th. they were going to tough parade at the ICI Bhavan for getting the CPT form. So out of curiosity, I asked them, "Where are you going?" So they said, "We are going and we are wanting to do CA and all." I said, "Why don't you also join me?" So I asked my parents. So they said, "Yeah, you can try it if you want to do CA." So I told them my two of my friends are doing it. So I went, I filled the form, cleared CPT in first attempt, then joined JK Shah classes for the PCC. Did started my articleship with a known chartered accountant, my father's friend, and the journey started. I cleared PCC also in first attempt. So then I was little, taken back that this is getting serious. I have cleared two attempts. Now I really should, my luck every time it cannot be luck. I should get serious. I should put in that kind of efforts. So that seriousness came in. I started studying 16 hours, 18 hours a day. And in 2011, I graduated from NM. 2012, I cleared my CA, all the three levels in first attempt. So everyone was happy. My family was so happy that in a family where no one had even gone to college, I went to college. I did CA. Then after qualifying, I joined NKGSB Bank, which is a cooperative bank into traditional lending business, where I used to do secured, unsecured loans, business loans. So I had a lot of learning over there. So this most of the people would have had this sort of a journey where they became qualified, they started working. But few things which CA helped me, or which were done differently, is going beyond limits. I had never thought belonging to a family of traders, who are always into business. None of the people in my last 4 5 generations have done a job. So that going beyond your boundary, doing something new, this CA has taught me. That was also a sort of a startup journey for me. I did something new. Uh, Later in 2012, I joined the bank. I worked there for a couple of years, but then always in the background, I had that all my family members, my younger brother, elder brother, everyone were into business. So I wanted to do something of my own. So that some I felt this is sort of a comfort zone I am working in. I wanted to move out of it, do something differently. So very abruptly in 2014, I resigned from my job and joined my family business. We had retail shops, couple of retail shops. By in 2013, one of my younger brother, he had taken a QSR franchise where they used to sell ice creams, shakes, a lot of hot snacks, and he was doing quite well. So that inclined my interest. We took master franchisee rights for that brand. Within a year, we expanded to three outlets in Mumbai, and all three of them were doing very well. After a couple of years in 2007, 16, 17, the idea had come in 2015. We thought, why not start something of our own? Still a franchisee, we are working for someone else. So we started our own brand, Desert Junction. We had set up a small factory where we used to make our own ice creams, we used to make our own snacks, and then we started with a single outlet. Within a couple of years, we expanded to 10 plus outlets in Mumbai and also in Gujarat and Rajasthan. So within a couple of years, that sort of expansion happened very quickly. And here, CA helped me in a lot of things. Being very cost conscious. I was so cost conscious. I was so rigid in selecting locations because I always knew what is my gross margin, what is my markup, what would be the fixed cost of expenses. So this helped my, all my outlets were profitable from the third month of operations. Usually in QSR in FNB, it takes 6 months to 9 months for an outlet to come into. But then due to my what chartered accountancy had taught me, helped me in turning EBITDA level, EBITDA positive or profitable at an individual store level very quickly. Secondly, I was very compliance conscious. We used to work with proper licenses, proper permissions from day one. Usually, QSR startups at that stage are not very conscious. So, we were very much compliant. We knew what were the laws, our kitchen designs, the fire exit. Everything was done so well. So, there were no after effects or there were not sort of any inherent risk on our business model. So again, this CA helped me, and working in this sort of startup, I went beyond finance, beyond numbers. I have been pivotal in closing deals. I've been helped me to, I've even taken orders from customers, sat in the kitchen, worked in the kitchen, worked on new recipes. If there was some issue in the factory on a few machines, I've been in detail. So this startup has helped me to go beyond finance. Each and every aspect of business I could understand, and it helped overall in my interpersonal skills, which helped me in my fintech journey. So in 2019, then I decided to move out, and again I had done only lending in my life. I didn't want to again go on the QSR and the food side. So I went to Liqui Loans. Liqui Loans was then a year-old startup. They had a peer-to-peer NBFC license, and they were doing reasonably well. So through one of my friend, I got connected, and I joined them again into on the credit side. I was heading the credit and risk team there. So there as well, what kind of lending I had done was very digital, very different. It was all paper lending. There were files and files in NKGSB Bank, and we used to do it things very manually. Versus at Liquid Loans, it was completely digital. This was a very new thing for me. I learned a lot of things: how automation happens, how API integrations work, how business rule engine models are made, how lending models are made, and within the lending models there are n number of things. So it's a very deep lending models what we do. So I learned a lot of things there, and very quickly again my CA helped me to grasp things very quickly. And one more thing, they gave me a chance because I was a chartered. If I was not a chartered accountant, I wouldn't have got a chance in Liquid Loans, because they knew he's a chartered accountant. He's cleared in, he has gone through a lot of different curriculum. He knows how to get things done, the grasping power, everything. So all being a chartered accountant helped me as a background. People trust and respect our profession so much that they were willing to give me a second chance, and they had bet on me, and their bet was very successful. They did it very well. So I learned a lot of things in liquid loans, right from credit, risk, underwriting, digital underwriting, how the tech system works, how the entire tech stack works. Uh, we had an in-house tech team, so making customization according to the product. So all these integrities, those small aspects, I learned at Liquiloans in the fintech part, which were not my KRA or my job. My job was to, if I had been a traditional bank, my job was to only assess the customer whether he is worthy enough to be given a loan or not. But just because it was a fintech, it was a startup, it helped me understand a lot of things. In 2021, I joined Credit Fair. It was a bigger opportunity for me. Credit Fair was started in 2018. It was when I joined Credit Fair. It was a very small startup. We were hardly a team of 20, 25 people. And I was asked to head the credit team. It was a very small 3-4 member credit team. And we started working over there with a similar business model what Liquid Loans used to do. In terms of numbers, in 2019, we were say a 20 crore AUM. We have grown almost 30x now. If I look my March numbers, we've grown 30x. Our team size has grown from 20 to 150, and uh, just because I was a CA, my learning skills, so that has helped me to gain a bigger pie uh, in the entire credit fair system. So going on to my tech journey. So in 2019, I joined Credit Fair. There, apart from normal credit underwriting, credit risk, I also used to look at controlling risk control unit. In 2022, I headed the risk team as well. With my experience in DDs and equity raises, debt raises, etc., I was given the ownership of debt and equity raising as well. So I look at those aspects as well. Of course, the previous ones are still with me. None of the departments have gone out. And in 2023, one more lending partnership. So the co-lending models which have come in where NBFCs work with banks and bigger NBFCs on a risk sharing basis. So what my founder also always says that the kind of respect he has for chartered accountants, because the grasping power is so good. We are very much reliable. We know how to get things done, and the understanding on a 360-degree level has he's very impressed with chartered accountants. So this was my journey. Now, how a CA can go to a CEO? I am projecting myself that I'm predicting, or I have projection that I'll go to a CEO ladder in next few years. Just not a CFO, just not a accounts head. Usually, we chartered accountants, we dream of becoming a CFO, we dream of becoming an investment banker. But then it's not such. We can be CEOs, we should be CEOs, because the kind of understanding we have about business, coupled with the numbers, the profitability, costing, FM, whatever we extra skills we have, we are better leaders than others. So the first topic here is how we are from zero to hero. So people think we are only around numbers. We just do balance sheets, profit and loss account. But that's not the thing. We can be a hero. Second, with the very early stage in our life, we have been exposed to audits, to tax audits. So we have seen a lot of different businesses, and we understand those business models. So that sense complied, coupled with the conscious compliance sense we have, that helps us a lot. Again, being on top of numbers, I've been repeating it a lot of times that we are always on top of numbers. We understand profitability, we understand unit level economics. A lot of startups, they just start, they keep on burning money, they keep on adding a lot of revenue, but the bottom line is always negative. But we as chartered accountants, we are very conscious. We track daily P&L, we track monthly P&Ls to know what numbers we are. Of course, to grow a business, there may be some kind of burn, but then our ultimate vision, or we know at least the roadmap or pathway towards profitability. That I would say. We are very quick learners. Within 3 years, we learn so much of curriculum. It's a vast curriculum. We learn it very quickly. Along with, we've been managing college, we've been managing CA classes, we manage the articleship. So the kind of learning, it's a three-way learning, and we are able to grasp it very quickly, very easily. So our DNA has that quick learning sort of an attitude. Lastly, with such a vast syllabus, perseverance is in our curriculum. A lot of time you go through multiple attempts, a lot of ups and downs happening in your entire CA journey. So there you learn a lot of perseverance. You learn about that. So you do हार नहीं मानते CA, attempt पे attempt देते रहते हैं. So and in the business also, it is not a sprint, it is a marathon. It takes 1,000 days for a business to scale, and then you start getting those benefits. Jumping on to the last part of our PPT, last part of the session, is for our members, who are into practice, who are doing that traditional practice, but then they can also be a play a pivotal role in this entire fintech, in the entire startup ecosystem. So, a lot of chartered accountants are, you know, giving investment tips, are guiding people to make wealth. So, even those people can use these modern techniques and technology to create wealth for their clients and themselves. So, a few examples are P2P investments, which I again explained in detail that P2P investments help you to get on a platform, identify your borrowers, you decide what kind of risk you want to be, and the earnings there can go up to 18%. So that is picking up. So the individual investor or individual person won't understand what are the risks and rewards, but we as chartered accountants, we can tell them what risk it is, what reward you will get, so we can underwrite better. Small case again is doing very well about doing the fundamental and the technical analysis about equity market. angel investing again in startups. So there also you need a lot of technical understanding. Normal individual cannot, he does not have that kind of time, that kind of understanding to invest in a startup. So we as startup accountants who are into practice can definitely help them, guide them, and mentor them. There is one more thing called fractional investment, where pool of people come in and buy an asset and enjoy the income over there. So there also again similar to angel investing, but of course the risk is little low because you have an underlying asset for that. And so that kind of analysis, that kind of learnings are friends in practicing, friends in practice can do it for you. I think it was very difficult for me to cover all of these in few slides, but I've tried my best to cover most of the things. I'm sure you all would have a lot of questions or any sort of doubts, so we can jump onto the Q&A session. Are we waiting for some? Riksha? Hello. Yeah. So apart from these different roles which we can have as a chartered accountant, as a practicing chartered accountant. So you lot of people who are you have not worked in a startup, but you are wanting to learn few things in the startup, or how these systems work, how these products work. So there are courses right from IIM to upgrad and a lot of international universities as well, where they teach you business analytics, which is more on the technical side. They teach you Python language, which helps in doing a lot of analysis on the product side, on the data science side. So AI, ML, and data science is doing wonders. They're trying to solve a lot of problems very quickly, very efficiently. So I myself had done a course from a tech startup where I had learned business analytics and data science. So that helped me to take a lot of decisions very quickly along with the underlying data. So there is now you can't just take random decisions. If you're a small organization, it's fine. You can take a decision on your gut, or you feel something, or you apprehend that the market is behaving in a such a way. But then beyond a certain point, you cannot take decisions just because you feel something or just because you want to take a decision. It should have a underlying data with it. So that kind of data analysis is also very important. And we as chartered accountants, we are always we understand numbers. So with additional sort of a training or additional sort of understanding on the business analysis, analytics and data science. So these are short courses, 3 months, 6 months, depending on what kind of course you are taking. And most of them are online, so you can have a weekend course. So that with that kind of learning, with being a chartered accountant, you can have those roles as well in the organization. So speaking about speaking about a fintech startup where all possibilities a chartered accountant can play. So very traditionally, of course, we need chartered accountants in the finance and accounts team. There, it is not about just traditional accounting or traditional finance. Uh, we try to bring in a lot of things on the system. We try to automate a lot of things. So initially I had say 10,000 loans, and I have to book an interest entry about it. So people very in the old times, people used to manually punch those entries. Later on, there came SAPs where you can extract data. But now the kind of automation if you want that it's 30th of the month today, the system should know that this is 30th at 12 in the midnight. They should start running those finance interest entries, and all my statement of account should be ready. They should be email should be sent to all the borrowers without a lot of manual work can be stopped. That people, I have a team just sending statement. That is the worst thing what someone can do if that can be done through system. So there we chartered accountants can have a lot of important role. We can, because we know what the requirement of business is, and there's a tech team who does the heavy coding and everything. So to make them understand what exact requirement we have, uh, we are able to communicate it better. So there again comes the role of a product manager, which is a sort of a communicator between the business team and the tech team. So that role we can do it very well. In a fintech startup which is into lending, you always money is your raw material. So you need keep on needing, you need money every day for disbursement. So there, a chartered accountant can play a very important role. You can present your fintech with with banks, with NBFCs, with bigger banks for co-lending limits, for business correspondence arrangements, for securitization transactions. So their chartered accountants have a very good role because we understand these things. We understand underwriting. We understand the paperwork, the compliance work. Thirdly, on the day-to-day operations as well. We are so used to going into minute details. We know people management, we know software management. So there also, we can help doing a lot of things on the operation side as well. and uh, on the overall business side as well. So we have our CBO currently is a chartered accountant. He was from a finance background. He was sort of a DSA for big MSMEs and big SMEs. He used to help them arrange funds. But then once he joined the fintech, his inclination was more towards business. He understood the product so well, and he used to pitch it on our business side so well that he is now working as a CBO and he's very successful. So chartered accountants can play, any role in an organization. They have different roles, and I have seen myself a lot of times. People like chartered accountants have proven themselves to take up such leadership roles. One more thing with these P2P NBFCs coming in. So there, you need retail funds. You need to bring in funds from retail individual investors. So, just think if a normal finance guy going and explaining those retail investors about, why my company is better, why my company is safe, why your money would multiply with me, versus a chartered accountant going and explaining these things is a totally different thing. The kind of, convincing power we as chartered accountants have is very high. On the P2P side also, there are different models. Either you directly go to a consumer or you use a business in between to go to a consumer. So you say tie up with mutual fund distributors, you tie up with chartered accountants, and you empanel them, you onboard them, and then they help you to get retail investors. So managing that cluster of people who are, very professional, are from the finance background, who understand this well, a chartered accountant can help a lot. So in even in fintech, there are a lot of roles we as chartered accountants can play.
Yeah.
Sorry for the technical. There's some technical error. So now let us understand, what other different types of startups are. EdTech, is doing a lot of big thing. The kind of valuations, the kind of learning they were giving. So since COVID, there has been an uprise in the EdTech sector specifically. A lot of startups have come in. They are giving trainings not only to skill sets development, but a lot of things are done for the professionals as well. So reskilling, upskilling, these sort of startups are doing very well. So in reskilling, upskilling also, a lot of finance related courses are going, where we chartered accountants can play an important role in giving our learnings, giving teaching to those students, and most of them are online courses. So there, we chartered accountants have a lot of opportunities we can bring in. Secondly, now in the traditional coaching industry as well, which used to be very fragmented, very small tutors coming in, where every local area had a different coaching center. That is a lot of consolidation is happening over there as well. Their big players are coming in. They are teaching finance, non-finance courses. So that is also kind of a startup, and again, we as CAs can contribute a big role, not only on the teaching side, but on the non-teaching side as well. Curriculum setting, those things can be brought in. Even ICAI is starting now, promoting startups. They have a startup uh, promoting going on, where they would be having incubation center, incubating different startups. They would have a Shark Tank sort of ICAI tank coming in, where they are promoting and they are wanting chartered accountants to participate and bring in different ideas, new ideas on the table. Other startup sectors, where which are coming up. So I'm now trying to highlight what new is happening in the startup. So the edtech, the fintech thing has was doing well, had done a lot of things, but now the new areas where the startup, I would say, are emerging startup areas, would be in green energy. Our government of India is also promoting green energy. A lot of worldwide push has come in to bring in green energy into focus. That may be solar rooftop generation or any sort of alternate energy resource. So there, the opportunity is very high, and we as chartered accountants, we try to upskill or reskill ourselves with a little bit of knowledge around that domain. We will have big opportunities in the green energy. So me as a chartered accountant, I did a deep analysis of the solar rooftop panel business. And recently, we've started funding from our fintech as well for these rooftop panels. So, we went in so detail. We tried to understand, how much a panel cost, what is the payback period for the panel, what kind of unit generation that panel makes, and how the overall consumer is benefited. So, on an average, if you buy a solar panel, uh, within 4 years, your panel will be free. If you take a loan, the kind of EMIs or the interest you would be paying in, it has a 4-year payback period, and the panel life is for 25 years. So you can use those 21 years are your actual earning. On this side as well, a lot of wealth tech startup have come in who are doing fragmental investment on the solar panel. So, example, someone is building a big solar farm, and there I want to have a fragmental ownership. So the whole point is, we as chartered accountants, we should be having that willingness to learn new things, to understand what next or what new is going to come in. And with that attitude, I think we can be everywhere. We can go to any domain. It may be technical, it may be non-technical, it may be financial domain. So all the domains, I think we are able to capture it very well. Overall, on the part of again the life at a startup. So let me tell you, how a life is at startup. So in MNCs, it is very much regulated. A lot of rules are there. A lot of SOPs are already there. But in a startup, it is very much fragmented. Every day something new comes up. uh, there are no specific written set of rules. uh, you have you maybe are doing you may be doing something X, you may be asked to do something Y the very next day. So the life at a startup is, a lot of hustle is there, a lot of different things come in, and that kind of learning, that if you enjoy that kind of area or that kind of job roles, I think startups would be very much welcoming to all the chartered. We can start the Q&A session. I've spoken a lot about startups and the journey around.
Tha- Thank you, Shrenik, for a very informative session, as I would say. We have a couple of questions. The first question is from Praniti Lodha. She's from Chennai. Her question is, there is no stability of jobs in startups these days. So, didn't that bother you?
Right. I agree to your question. There is no stability of job at a startup. But then before joining a startup, you have to do your homework. You try to understand. You should try to do a due diligence as if you are investing in that startup. So you try to understand, the founder's background. So because a lot of bet on a startup is on the founder. They might be doing a business today, but then the chance of doing a pivot, changing the business model is very high if you have a good founder. So a lot of weightage is on the founder. So you try to understand the founder very well. You of course you try to understand their business model, try to understand what kind of valuations that model is coming in, bringing in, what revenues they are doing. You would get all that data on the MCA very easy. What numbers they are doing. So that kind of homework you have to do before joining a startup. Otherwise, it is a risky.
Thank you. Another question is, what about career in CFA along with MBA in FinTech?
So again, CFA and MBA. So it depends. In CFA, there are a lot of technical analytics. You understand more on the financial management and those aspects. So those things, of course, can help in a startup. You would have to take. You would be open to different roles. You can be exposed, I would say, to different roles similar to a chartered accountant. MBAs, I think it depends, what kind of university you have done in, what kind of subject you have done in. There, I think a sort of limitation would definitely come into if you have done, say, in sales, MBA in sales, you would be restricted to sales. Of course, if you are from IIM or those kind of leagues, then the doors would be different.
Okay. I would again request all the listeners, if there are any questions, please type into your chat box and send it. We are open for the Q&A sessions. We have a couple of more questions, Shrenik. What skills would be required to be worked upon in order to be able to work with startups?
There are no skills as such required. If you are a chartered accountant, I think a lot of skills you already have earned in your entire curriculum, in your entire journey. So, the best thing about the CA curriculum is you not only understand the book knowledge, or I would say the theoretical knowledge, but you also have the practical knowledge which the articleship experience brings in. So, we know the real world. It is not only on the books, unlike the different other, I would say, if it's an MBA or a CFA or an engineer, they have a lot of theoretical knowledge. They have not seen the real world outside. But then we have been exposed to the real world at a very tender age, at a very young age. So we tend to, mold ourselves very quickly, and working becomes very easy. Of course, with the skill sets you bring in, you have to be open-minded when you're working with a startup. You can't be rigid that this is my role, this is my KRA, I won't go beyond that. So people with that kind of attitude won't really do well in startup. You have to be open-minded. Try to, if any new challenges, new job roles, or new responsibilities are given to you, you'll have to do it. A lot of stretching might happen in the initial period, But then once you're through it, I think then your life is easy.
Very true. Um, there's another question. Is there any platform for where we can get information about startup companies? That's a very interesting one.
There are a lot of startups, so a lot of angel investors are running this. There's I would say to name a few VC circle. So you can follow a lot of people on LinkedIn who are all around startup who are doing angel investments, and there are different groups as well, even on WhatsApp and online, where you can be a part of that community to get a lot of updates about startups. Now, the best thing about AI is, the more you read about startups or the more you search about startups on your browser, they will start showing you highlights or they will start giving you nudges that, this has happened to this startup, this has happened to. So, N Tracker, I would say, is a very good website or a very good platform where you get a lot of information about startup. And Crunchbase is again a website which is sort of a data. Lot of data is there about startups. So right from their founders, what is the revenue they are doing, what the funding rounds they have done, which were the VCs or investors participating in that round. So there you get a lot of things. Or even if you just follow a few VCs and marquee investors, they keep on posting about their new investment companies. So there you will get a lot of data.
Correct. And I think apart from that, it is very important to attend some seminars and all of that from where you get contacts, and then
True,
you can just, yeah. So I
true,
think
exactly.
that's a very important thing that most of us we're not doing post COVID world.
Exactly, exactly.
Yeah. There's another question on so if you're already having a job as a CA, how one should really explore the startup opportunity cost?
So see, startups are also at different stages. One is at a very nascent stage, would be a very small startup. They have just originated the idea, they're trying to execute it. Versus there are bigger startups, who are quite settled, well funded. So if you don't want to take a lot of risk and you want to be a part of on a different on a startup, it is at a reasonable scale. Those startups, those opportunities would very easily get on LinkedIn as well. But if you want to go, if you want to, you're betting very much on small startups, try to be a part of the founding committee or the founding teams. Then you'll have to attend. Then there's those software aspects come in, where how you're networking, what kind of people you're meeting. There you would get a lot of opportunity.
And I think that also depends on the risk taking appetite of the
Exactly,
individual.
exactly.
Like if you're having a very stable job and if you don't want to go ahead and take that risk, then I think it's
Right.
not for you. But if you
Yeah,
have
it
the
is
risk
always.
taking appetite,
Yeah, you should be ready to take that plunge. To move out of the comfort zone.
yeah.
Because the startups look very limelight. There's a lot of limelight from outside, but inside there's a lot of hustle, a lot of hard work, a lot of long hours coming in.
True, true. People only see the rosy picture that once
Exactly.
the startup takes off, people only see the rosy picture, but then they don't see the struggles behind it. So that is something that
Right.
one should be mindful of.
We at
Um,
Credit Fair also have a lot of opportunities. Feel free if you want to write it. We have a lot of,
right.
and we always encourage chartered accountants.
Oh, that's very good. There's another question. Is it a good idea to invest your finances in a similar startup before getting into a startup?
See the kind of, so again, if you want to invest a smaller sum or a smaller amount, it would be a very nascent age startup. The bigger ones, you won't get a lot of value, or the investment amount has to be quite significant to have that kind of learning. Uh, Investment in a startup again is a very risky proposition. 1 out of 10 startups, they actually succeed. The 9 actually close down. So picking that right one is difficult. So what these angel investors usually do is they invest in 50, 80, 100 startups. Out of that, 5, 10 startups actually give them a 40x, 50x return. and then they are making money out of it. So I think investing is again is a risky proposition, but there are a lot of other ways to understand about a startup than just investing in it.
I think these are the only questions we had. If you still have any questions, we will wait for another minute or two. Uh, There was another question on unstructured CPERs for this webinar. So there are no unstructured CPERs. Unstructured CPERs, any which ways you can add depending upon. You can just read the guidelines on the web page. I think that's it. Tejas, do you want to take over? Thank you so much. Thank you, Shrenik. Over to you, Tejas.
Thank you all for joining today in this insightful webinar. We extend our sincere appreciation to our distinguished speaker, C.S. Renik Shah, for sharing his expertise and knowledge. Your valuable insights have truly enriched us in understanding of fintechs and startups and opportunities for CAs in this field. We are also grateful to all the attendees to their active participation and thoughtful questions, which have been wonderful opportunity to learn and exchange idea. We we look forward to more such engaging sessions in the future. Once again, thank you all for being part of this event.